Well, hello, Mr. and Mrs. Kessler. Thank you for coming by. I know with the weather being raining and all that, I really appreciate you guys still being able to come and make time for this meeting. I would have totally understood if you were not able to make it today, especially just coming back from your trip, which I want to hear about. But again, thank you for coming, and hope you guys are doing well. Found the place okay for the second time. I know the first time you got a little turnaround in the parking lot. Okay, good. So you found it okay this time around. Okay, well, glad to be back in Minnesota. I know the weather hasn't been great there. How was it down in South Carolina? Oh, good, good. And did you make it to Myrtle? Did you make it to Myrtle Beach? Okay, and you tried the Pier 14. Please tell me you tried the Pier 14. You did. You did try to do that. Good, good. That is my favorite place when I go visit my uncle who lives there. That is, we get to the airport, we go to Pier 14, and we get the fried shrimp there, which is really great. So I'm not sure what you got there, but did you enjoy it? Enjoy the food at least? Oh, good, good. I'm glad you guys had a good time. It was good to get away a little bit. Awesome. Well, good, good. Thank you for sharing. Please have a seat. You are going to notice a couple folders in front of you. There is going to be some information there that we'll go over, but most of all, I just want you to be able to take that home with you. Today, we are going to discuss a few things at a little bit higher level. So, for the things that we don't get a chance to, I want you to know that they're in the folder. We are going to talk about them all over the next few months. However, today I just want to focus on a few things that our team believes require the highest priority for your plan, and make sure that I can answer any questions, set any expectations that you might have on how this relationship might look like moving forward. Okay? Okay, good. I did just want to ask about Robert. I know last time we spoke 4 6 weeks ago now, I think it was, he was just finishing signing his divorce, and just want to make sure that he's, want to check in and see how he's doing, make sure that the kids, the grandkids are doing okay. I know Kevin in his second year of college now, a lot of transition for him. So okay, good, good. So he's enrolled in all the classes full time. I'm glad that he's taking it in stride. And James, still being at home, are they kind of figured out all of the custody stuff and they're kind of in a good place? Mm, yeah, that's good. Well, we have a variety of different resources for a variety of different reasons. So if Robert ever needs any type of resource as he's going through this period of his life, and I'm not saying that he needs it or anything like that, but if he does, please be aware that we do have um, either attorneys or other types of resources that we can refer him to depending on what he needs. Obviously, this is part of life, and we deal with life, and so um, our team has a lot of good folks that we trust in that have helped some of our clients navigate through situations similar to what Robert's going through. So again, just thinking about him. We are kind of about the same age, so just wanted to see how he was doing. So I'm glad that he's doing well. All right. As I said, we are going to go over the recommendations. I'm going to keep it a little bit high level, and the reason is because there are a lot of recommendations that we do have for your plan. Right? You have a lot of big goals that you want to make sure that you accomplish. And we want to help get you there. Okay. We don't want to, however, overwhelm you to the point that we're not taking action. So we're going to take it in bite-sized chunks. Okay. Now I'll go over a lot of, again, what do we think we need to do? and we're going to prioritize it, right? We're then at the end of the conversation going to have kind of an action plan, right? So what do we need to do right now? What do we need to do next time we meet in probably 3 to 4 months? And what do we need to do after that, 6 to 8 months, right? As I said, and you may or may not remember this from the first time that we met and we kind of got introduced, was that at the beginning of the relationship, there are going to be more meetings than once we get the financial plan set up, right? Once we kind of get all the moving pieces in the right places and whatnot, the cadence might be where we're just meeting every 6 to 12 months, somewhere in the neighborhood, semi-annually, whatever's comfortable. However, at the beginning, probably the next 12 months, we will probably meet 3 to 4 more times as we get everything lined up properly. Okay. I have some notes. I want to make sure that I am detailed in going over them for you. So I'll kind of be looking down and making sure that um, we're addressing everything properly. Okay. But again, the folders that I told you are in front of you. There's going to be 2 documents. The first one's going to be just a Word document that shows you all of our recommendations. Okay. Again, if you get bored tonight and you are watching, your favorite CSI show, like you told me you want to do, that you like doing, and you want to read through it, go ahead. Otherwise, my job, my role, my goal here is to explain to you all of the things that we are doing. Okay. I do believe that this is the plan that's going to achieve all your goals. And one of the things that I take pride in is just educating my clients. All right. So the joke that I make is that if you are at the family barbecue and Uncle Ronnie comes over to you and says, "Hey, what is going on with your money or your financial plan or whatever?" You know exactly what's going on, and you could tell him confidently where you are. Not that you ever would tell Uncle Ronnie all the details about your financing, all that, but in back of your head that you know exactly where you are, why you're doing things, and where you're headed. Okay, so again, that's my goal. So let's begin. Okay. Um, I also want to reiterate that this is going to be a long-term relationship. Okay. And going back to how we are going to meet a couple different times this year, I don't want you to feel that all of this needs to happen right away, but I want to assure you that our team is going to walk with you every step of the way to make sure that this gets done um, as best as possible. Okay. And, at a reasonable speed. Again, we don't want to delay anything that needs to be done either, but we want to make sure that it gets done properly. Okay. So the first thing that I want to do, well, first of all, let me stop. Do you have any questions on that piece? Of course, you can always call, email me in between those meetings. If there's something that comes up, something changes along the way, please do not hesitate to call. The cadence, I guess, the formal cadence that I mentioned is not that we are going to only be doing that, and that's the only time we can talk. If at any point something comes up, change. You have let's just say that the oldest grandkid meets somebody in college and they decide to get married or whatever that is. Any changes that happen along the way, Robert meets somebody and he decides to start dating. Again, I'm just brainstorming different things, but I want you to know that I want to hear about it. The more that I know, the more that the plan can be customized. Additionally, the other thing that I didn't mention is that I tell a lot of my clients is that this plan is a snapshot of your life right now. We are going to make this the best possible plan that we can for you right now. However, as those things change, as different life events happen, as goals maybe evolve, there may be adjustments that need to be made. And again, the more that I know, the more that I can help and walk you through those adjustments. So again, just wanted to let you know, please, to answer your question, yes, please call me, email me anytime. I want to make sure that I am there and available for you guys through any of the changes that might come up. Okay. So again, the two things that we felt were most important right now, we're going to be taxes in your estate plans, right? Your estate plans is kind of one of your number one goals as it is, and we want to make sure that a couple of things, all of the ownership of all of the property that you have is titled correctly, and we wanted to make sure that any gifting or anything like that would pass properly, and we wanted to also avoid probate if possible, right? Ideally, if one of you two were to go, we want to make sure the property just passes right on to the next person um, as easily as possible. We don't want to be dealing with courts and all of that stuff. So let's start with the sale of of your company. Congratulations again. How has it been the last 2 3 months now since you sold it? Stepping away from it. I've had a lot of clients kind of tell me that it's like, letting go of your first child or sending them to college or something like that, right? You've given your entire life to this. So I just want to check in on you and see if you filled up your time with other things. Oh, good. Yeah. Well, as you know, I still got the four little ones. So my reading is not as much as I would like to be. I remember before I had kids, my goal, I usually hovered around one book every 2 weeks or so, depending on the length of it. That's kind of where I hovered, right? And I'm talking about the average, 100, 200 page book and whatnot, somewhere around there. Not like Chronicles of Narnia. That's like a 800 page massive enough. That would have definitely taken me longer. But your average finance book, your average um, historical book, whatever that was, I definitely try to again hover around a book every 2 weeks. I never quite made it to a book a week, but currently with the four little ones, yeah, I'm at about a book every 6 months. So it's embarrassing, but I'm working on it. Working on it. They're sleeping through the night, so that's great. But good. I'm glad that you've been able to find something um, that's great. No, and I'm sure being in South Carolina helped, right? You guys stayed pretty busy. Did you travel? Did you go all up and down the coast, or did you stay in Charleston for the most part? Okay, good, nice. Yeah, that's a really nice area. Yep, we've been fortunate enough to then go there as well. Okay, okay. Well, good, good. Glad you enjoyed that. So, the first thing, the first concept that I want to be able to talk with you guys, and it's going to be really important. And I know that as you went through selling the company and you talked to attorneys and the broker that helped you broker the deal and all that, kind of explain a little bit about this. But I want to again recap it to make sure that we are in agreement on how this works and why we're doing things. It'll help us set up the table for the future. Okay, so I want you to think about the word basis, uh, think about long-term capital gains, and ordinary income. All right. So the basis, I says it's going to be what you put into the company, right? As you were think of it as your capital contributions into the company, right? We won't be able to find the exact hours that you put into the company to compensate you per hour, but it's the value, right? The value you spent getting your company up and running. Again, as you were working with your accountants and attorneys and whatnot, you guys came up with a figure. That figure was $875,000. So in the eyes of the IRS, those were your contributions into the company. So they're not going to tax you on that again, right? In their eyes, they've already taxed you on that money, right? So somehow you got this money. So ideally, it's again in their eyes, you already taxed on it. So then you took that already taxed money, you put it into the company. So they're not going to tax you on that $875,000 the second time, but everything above it, they will. All right. Then I want you to think of long term capital gain. Okay. This is kind of the easiest. It's again the difference between what your basis was in the company of 875 to the $3.8 million that you sold it for. Okay, so that difference is going to be the long-term capital gain, right? Pretty simple, straightforward. There, 2.9 million or so in capital gains. The last piece I want you to talk about is ordinary income, and that is going to be the interest that you're charging on that installment loan. Okay, so because uh, the folks that bought your company didn't come and just write you a check for the $3.8 million that you sold the company for, but instead you came up to an installment agreement. The way that this is going to be taxed is, and the way taxes work, they're kind of on a yearly basis, right? So this is going to be taxed on what you've actually received. Okay, so I wanted to first break down the installment payments that you are going to be getting. Okay, so on the installment payments that are $41,553, $10,133 of that is going to be ordinary income. So when we go to file your taxes next year, that will be as ordinary income, as income that you've earned, worked for. That's how that is going to be taxed. $5,581 of each one of those payments is going to be that return of your basis, that $875,000 that your team figured out that you contributed into the company. Every little payment is going to be returning that basis to you. Okay, again, $5,581, which leaves $25,839 is going to be the long-term capital gain, and it's taxed a long-term capital gain rate. Okay, so I want you to keep that in mind when you are every payment that comes in. I want you to understand kind of that concept, how that's split up, and how you are still going to be getting a lot of ordinary income, at least while the loan is being paid through the next 7 years. Okay. Now this year that you sold the company, you also received a 20% down payment, which was $760,000. The return on basis on that was $135,000. Okay, so when you take 760,000 minus what you put into the company, that 875, 20% of that being $135,000, your realized and recognized long-term capital gain is going to be $625,000 on that portion of it. Okay, so want to make sure that you understand that piece and how that works, and why we're going to be making some of the decisions and recommendations that we are moving forward. Okay. Also, while we're in taxes in the state, the reason I wanted to start with that was because one of the questions that you had was about your father's stamp collection. Okay. We called around and used the brokerage house that you wanted to use for a particular sale of this rare piece. Now, they charge a 15% commission. That is just the rate that they quoted us. If you have a relationship with anybody there, uh, or maybe because of the value of the item selling, if that commission changes or anything like that, uh, that could very well be it. But the 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 commission charge they quoted us when we called and did a little research on it was 15%. Okay. Uh, if the stamp collection is valued at $2.6 million in the future, when you go and you're ready to sell it, the commission that you're going to pay on that is going to be $390,000. It's a big number, but uh, going to be pretty tough to sell that on your own. And you might get quite a bit less if you try doing it on your own than going through a brokerage house that can advertise to the right buyers and qualify the buyers and make sure that the funds are secure into your account and all the things that go into securing such a large sale for such a unique piece. So um, it's worth it. It's about on par to what we normally see. Okay. The cost basis, again, similar to what we're talking about. The stamp collection is going to have a cost basis based on when your father bought it, when he passed it to your mom, and when your mom passed it to you. The cost basis that we determine on that is going to be $825,000, and you will have a 3.8% net investment income that you have to pay on that gain. Okay, so your net profit growth, so will hit your net profit that will hit your account would be $2,082,000, $82,730. Okay, so those are the exact same figures, and additional detail is in that Word document that I told you that is on your folders. Additionally, the other document on your folders I failed to mention is that all of our financial analysis, all of the documentation that we did, is in those documents, so you can understand how we got to the figures that we got. And if you don't quite figure out why we got to where we got or anything like that, just let us know or let me know and we can walk through it as well. Okay, so again, we can hop on the phone, we can review it again next time you come back, so you have a good understanding on that. Okay. Now, your balance sheet and cash flow are strong. Okay, so again, that's part of the reason why we want to just stick on the taxes and the estate. Okay, but the reason I bring up your balance sheet and your cash flow is that you are sitting on a lot of cash, and a lot of it is in those CDs that are only in your that are only in John's. Okay, and the reason that I want to bring that up as we're talking about your estate, John, is because if you were to pass, those CDs would still have to go through probate before they went to Mary. Okay, now they might expire and they might be sitting in cash until probate goes along and makes a decision on that account, but just know that that's how it would happen. Okay, so when we're reviewing estate documents and minimizing uh, probate as you pass money along, we want to title, we call it titling. So instead of the CDs just being titled in your name, John, they can be titled in both of you guys' name. As we are going through your titling, this helps us understand how they're going to pass from one person to the other, John to Mary or Mary to John, whatever that is. Okay. Now, because you have so much cash um, from the sale of the company and having just been a really good saver, we are aware that you are going to have quite the tax bill. So we're going to use a little bit of we're going to keep some of that cash as April approaches and make sure that you have the funds available to do that. But also as the CDs expire, we also want to be able to start putting some of that money to work in the market, so that you are um, at least keeping up, if not outpacing inflation. Okay. One of the things that we tell our clients that is going to erode your money more than anything is going to be inflation. It's going to be inflation. It's going to be medical costs and things like that. So we want to make sure, especially with the experience the last couple of years of high inflationary periods, that your money is doing a good job to keeping up with inflation, so that you don't have to, change or decrease your lifestyle in any way. So when we do that, we're going to put it in a brokerage account, and we are going to recommend you put it in a joint account with rights of survivorship, which means that if either of you passes first, it just by function of law passes to the other person, and we're set there. No probate, no judges get involved, nothing like that. Just passes automatically. Okay. If you still want to keep a good amount of cash and CDs, we'll kind of recommend that you do joint CDs on that as well. Also keep in mind, that the federal insurance on it is to a certain limit as well. So we will do kind of the recommendation as the CDs expire. We have the dates on our calendar, and we'll remind you as they approach, and have a conversation on where we want to invest that as well. Okay. Again, we're keeping in mind how you want to invest your money. We are keeping in mind that we want to stay away from tobacco companies. That's been very important, clear to us as well. Okay. Um, Another takeaway, again, going back to the state, keeping in the conversation of state and titling, and how things pass to your beneficiaries. As I was reviewing the information that you said, and by the way, thank you for sending it so promptly. I think you guys got all the information to us 2 days after we had our original meeting, which never happens. So it was, we have plenty of time to review it. So again, thank you for that. I know that it can be a lot of work. Like I feel like a lot of homework to get all of your documents to us. But again, I can't stress this enough. The more that we have, the better the plan that can be. Okay. But let me just pause there before I go to the next topic. Questions there so far? Yep, exactly. Yep. Every time that they expire, we'll have probably a phone call. Again, I don't want to make you come here just to talk about investment. We'll get to the investment piece, probably maybe not this meeting, but the next one. But know that as we invest, we are thinking about those things. Great question. Yes, those accounts will also have beneficiaries as well. So that, again, in the horrible case that, and we prepared for this as well. Like I've told you guys about, my wife and I. But in the event that you guys are out to dinner and something happens to you both at the same time, it'll pass to the beneficiaries you designated. Yep. And we'll talk about the state and all that as well. Okay. Awesome. Well, on the beneficiaries thing, and I'm glad that you asked that. Great question. On that beneficiaries, what I wanted to ask, and I didn't see it, so again, I wanted to ask, because um, maybe we weren't just seeing it. It seems, but we do not see um, Mary and John as each other's beneficiaries on your retirement account. So on Mary's 403b, John's 401, we don't see you as the beneficiaries of each other's accounts, which means, again, if something were to happen to one of you, more than likely, or I would say that very, very good chance that a probate court would see Mary or married to John all these years and would designate that money should go to you. However, it may take 3 months for a court to get the documents. It may take 2 months for them to make that decision for you. So it may be 5 months on the road before we can actually make that money movement. Where if we have you named as each other's beneficiaries, that happens fairly quickly. Pretty much as soon as we have the certificate, we can make those changes. Yeah. Okay. Yeah. So we definitely want to do that. And I know we talked about moving those accounts into IRAs here at our firm so we could properly invest them and manage them. But I still want you to go. There's, that'll be like your short, immediate goal. I still want you to go log into your account and do it right away. I know it's highly unlikely something happens next week or so, but we just want to play it safe, okay? And plus, uh, by the time we get all that set up and the money moved and the accounts open and all that, it can be a week. Again, I'm not taking any chances. I hope you guys don't want to either. Okay. Yeah, perfect. We'll get that. We'll get that moved over. We'll get you guys as the beneficiaries. That'll be your first piece of action plan, your first goal for the day. Okay. Uh, so we are going to recommend that. We are also going to do again, keeping with the state and trust, a little deeper dive in the state. Okay. But I first want you guys. I first want you two to figure out um, who is that you want to use as the attorney to draft these documents. Last time we spoke, you said you had an attorney that helped you with the sale of the company and that you liked that person uh, and the company a lot, but that there was other ones that you also wanted to talk to because they focused more on and trusts and estate planning. So I want you to do that because once we have determined who it is that you guys want to use, we'll want to get involved in a call or meeting together so that we can go over our recommendations for your plan. And you know that attorney might have some things that he's seen that work well in your situation. And I think that if we put our minds together, we can just get the right type of planning for you. Okay, so we have our recommendations. Again, they are on documents that we've sent for you, but we are not in the mind that we know it all, and we can't take professional advice from a state attorney. We would definitely welcome it, and we definitely want to talk through those things. So again, that you are in the best possible situation. Right? We're part of your team, and we want to make sure that we're working as best as possible for you. Okay. Now, the recommendations, as I said in the document, are going to also have to do with tax reduction, um, the personal income taxes, portfolio recommendations, and reviewing all of your insurance documents. Okay. One thing that I did want to mention to you guys, as you know, Jake from State Farm recommended us to you, and I do need to lay before you that um, we do have a conflict of interest there. The reason why is that he has requested that any insurance recommendations that we have for you, um, that you check back in with him. Now, most people will do that naturally, right? He's your current agent. I believe, been doing a good job. He recommended to us. You guys came recommended by him. But I just want you to know that this conflict that is part of his referral to us. He has, we are going to tell you to go back to him for any changes that we're going to make. Okay. Um, there are some pieces. Um, that we like change on the level of coverage that you have primarily on your primary home that you have. But again, based on time and everything that we're talking about today, we're going to focus just uh, on adding beneficiaries today. Uh, the other piece is changing the titling. Again, remember the titling, the ownership, how it's labeled of um, your CDs as we go along, but also on the vehicles, right? So John, your car is in your name. Mary, your car is in your name. Again, something happens to one of you, car has to go through probate. Let's get those in joint ownership. The boat that is again in John's name, let's get that in joint ownership as well. So that is when it happens, it just passes to Mary. Okay. So that's going to be the first piece of the homework. And the second piece is going to be just, I want you to make sure that you're talking to those attorneys so that we can start drafting some of the state recommendations that we have. Okay. Uh, just kind of to give you a little bit of a teaser for next time, we are, again, we'll review that all the titling documents are accurate. We will make sure the beneficiaries are added. We get the accounts moved. We will review the investment options before we execute them. So the money will be sitting in cash, and we'll review the investment recommendations based on your risk tolerance, some of the things that you talked about. And then we'll also talk about doing some kind of Roth conversions. One of the things that really stood out to us is that you want to leave as much tax-free money for your children. So we want to talk about how we want to do that, how we want to be strategic about it. It's not something that we want to do all at one time and pay a big tax bill, but we want to do it strategically on a yearly basis so that we can minimize your taxes as well. Okay, so that's kind of the action plan that we're gonna have for today. How does all of this sound so far? Yes, we'll get together with Angie, our assistant here, and she'll kind of guide you on how to do a lot of the things that we're asking you to do. She will also connect you with our calendar so we can make the next appointment and moving along. Now, if you decided on the attorney next week, please call me, let us know, and we can kind of move that up. But I want to give you enough time so that you can really do your due diligence and make sure that who you want to work with as far as drafting those documents. And then again, I have some insurance recommendations, but I want to make sure that we can review them with you before you just go and read and talk to Jake about the changes that we might make. I want you to feel comfortable and understand why we're making those recommendations again, knowing that in fact, Jake is incentivizing us to send you back to him for that. And again, we've worked with Jake for a long time. We really appreciate him. He's knowledgeable, and I think that he's for you, and he's part of your team. So great. Okay. Well, good. Do you find this valuable so far? Is kind of what you're expecting? As I told you, it's going to be a few steps along the way. You can't get everything done today, but I want you to know that everything that we will do moving forward is in your documents. If you want to start reading through it and preparing yourself, you will see it all there in the recommendations. Okay. Okay. Well, great. Again, thank you so much for your time. This is really helpful. I'm glad that we're moving forward. I do believe that this is going to be a really good, strong plan for you guys, for you two, and I really I'm looking forward to more and more meetings. All right, well, let's go talk to Angie and get this moving. All right, of course. Thank you guys. I really appreciate your time. Thank you. All right, let's go.